Okay, it's another Wild Wednesday, and today I'm here once again with Jonathan Caguioa of Allianze Mortgage, and he's going to go over some information that both buyers and sellers could probably use. So let's see what Jonathan has to say today.
Hi ladies, thanks for joining us.
Let me turn you around. Here we are. There's Jonathan.
Hey everybody.
We're a casual Wednesday here.
Yeah, that's not a casual business suit. That's a summer business suit, right?
Yeah.
All right.
So, we have buyers out there who are starting to look. So what are you finding? Are you finding a lot of first-time home buyers?
Yes, actually a lot of first-time home buyers. And the main thing that they ask is, can they afford what their interest rates? More importantly is, take the guesswork out of the way. Let's go over your financing to see where your threshold is.
Mm-hmm. Usually what will happen, I'll get connected with someone and I'll say, here's a lender you need to talk to. That's the first step.
Yes.
First step is let's find out what you can qualify for. You might not be ready to buy,
right,
but at least we'll know where your financial goal is.
Exactly. 4 things lender look for. Credit, how your credit looks like, how much money you have in the bank, what your income looks like as well, and your overall objective in purchasing your home, how long you're going to be staying in there. That way we could formulate some options for you to see which works best for your objective in owning a home.
Do you find that there's still buyers who are using some of these, quote, first-time home buyer programs, or actually they're all going FHA?
Well, actually, it really depends. If they are lacking in funds and maybe low on the credit score, usually FHA is a great loan for them. We also have the first-time buyer program, which is a down payment assistance sponsored by the state called CalHAFA. 3.5% down is lent to them at 1% deferred payment on that one. So we have those programs. Of course, FHA is always a popular one, and a lot of first-time home buyers taking advantage of that. So you don't have to have 20% saved up to own a home today.
Right. You can get it with 3%, 3.5%, 5%, 10%, 20%, and mom and dad.
Mom and dad, always
and the
great.
bank of mom and dad.
Now, talk about mom and dad. We have this thing called the equity gift program, equity purchase program. I don't know if you've heard of that, Carol.
Okay.
If you have a parent, a grandparent, or aunt selling the property, they want to sell the property to you, they can actually gift the equity of the property, wherein you don't have to put in any down payment. They'll even pay the closing costs if they're a good relative or if they want to do that. And voila, there you go. You could purchase your parents' home or your aunt's home with almost no money down at all.
We, just so that everyone understands, we were here for a luncheon with my office, so we have a little background noise. I apologize for that.
Yeah, it was a fun lunch.
Yeah, fun luncheon.
Yes.
So what we're seeing now is properties are staying on the market a little bit longer. Mm-hmm. So are you finding buyers writing offers that might be at less than asking price?
Yes. Actually, we see a lot of that, and also sellers willing now to give credit towards buyers' closing costs. So sometimes they ask for a discount on the price, they try to go low, and if not, seller would say, hey, listen, I run numbers for them. Either we reduce the price this much if the seller is willing to give that, or we could finance your costs into the purchase price by giving it list price and then asking for closing costs X amount of dollars to pay all.
Right, so just talk briefly about buy downs.
Yes.
Interest rate buy down, because that seems to be one of the things. You have closing costs and you have interest rate buy downs that a lot of the sellers are paying for.
Yes. So what determines the rate is how much the cost is. The higher the cost of the rate, the lower the rate is.
Right.
So they start with what you call rate at par. For instance, if we're talking conventional loan, 6.5% is not costing anything. If you want a lower rate, say 1.5% cost, which is 1.5 off the loan amount, will give you a rate of about 6.125 to 6%.
Got it.
So that's the buy down right there. It's 1.5.
And it could be 1 year or 2 years, and what we're hoping is that in that time frame, the interest rates will adjust so you can do a refi later on.
That's what you call a 2-1 buy down.
Yeah.
And again, seller can help with those costs of doing the 2-1 buy down. Meaning, if the note rate is at 6.5, first year is at 4.5, second year is at 5.5, 30 to 30th is going to be 6.5.
Yeah. So, well, that's great. And what are I'm sitting with my seller, an offer comes in.
Mm-hmm.
I usually tell them, listen, I'm going to talk to the buyer's lender. I'm going to get as much as information because the whole goal here is we might find out that they're credit worthy. We need to find out that the money that this need for the down payment and closing costs is really there,
Mm-hmm.
and what's their ability in order to actually close the escrow.
Correct.
And so, that's something, as an agent, I will call the buyer's agent, and you get a lot of calls from other agents.
Exactly. So if you're a listing agent, it's good to have a cross qualification done. Cross qualification means you have your trusted lender take a look at the paperwork of the buyer. He connects with their lender, and then they verify how much he can qualify for. And usually we give it a stamp of approval. And there are very seldom instances where I would say, listen, there was a miscalculation here, and your buyer can't afford this much, and we're able to catch that.
Yeah, I've seen a couple where I had one situation where we were about to close, and he lost his job.
Oh, fortunately.
And they hadn't done the, there's always a phone call right before we close that the lender always calls to verify employment.
Verbally verifying.
Yeah.
Verbally verifying, yes.
And he got really cold feet. And the reality was the phone number that they had was only his number. So if he hadn't answered, it was a fine line, let's put it like
Yes,
that. We
yes.
didn't close the escrow.
Oh, okay.
Yeah, so
Figured.
those things can happen, and we have to be aware of the fact that we have no control over any of that.
Been in the business for quite a long time, about over 3 decades now. Always expect the unexpected.
Yeah, absolutely,
Okay.
absolutely. Okay, so
Okay.
hi Steve, thanks for watching. Okay, so I'm going to turn this around. Oh, oops. So we're going to look at this together. So it's been a wild Wednesday, and it's quiet now. So, if you're considering buying, now's a good time to talk to Jonathan, just to get prepared. It's not like you're going to be signing a check or anything, but you need to get prepared for what you can qualify for. Maybe there's a little credit that you need to take care of. Now's the time to do it. Even if you're going, interest rates, you know what? Interest rates are going to be wherever they are, and we need to find out what you can qualify for based on the interest rates that are today. So a lot of first-time buyers are out there. A lot of move-up buyers are running around. They're looking for their next home. Is that going to be you? So call me, Carol Gilles with Frederick's Realty, 310-864-9738. Sorry about that. And Jonathan and I will help you out. Have a good Wednesday. Bye.
Bye.